Bitcoin crossing back above $80,000 gives TFSA holders in crypto ETFs a fresh chance to rebalance position sizes before any momentum fade. This is Modern Investing Techniques, episode 149. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,653, down 0.3%. The NASDAQ Composite closed at 25,980, down 0.8%. The TSX Composite closed at 36,714, up 0.3%. Tariff threats continue to weigh on cross-border supply chains, while mining and industrial names gave the TSX some support. Both the Bank of Canada and the Fed remain on hold into September, with roughly 60% odds of a 25 basis point cut by year-end. Earnings season is largely behind us, so sector rotation and macro data now drive price action. About 14 days ago, we picked AAPL on a product redesign catalyst that ultimately closed down 0.81%, and the lesson was that volume confirmation must precede any catalyst entry when sector rotation is active. Portfolio allocation to gold and Bitcoin can serve as a risk reduction overlay when bond yields are artificially suppressed by policy. Ray Dalio's framework treats 10 to 15% gold plus a smaller Bitcoin sleeve as a hedge that historically lowers overall volatility while lifting long-term returns, especially when fiscal deficits keep pushing real yields higher. In today's environment of elevated long-term treasury yields and tariff-driven uncertainty, the approach translates directly to a TFSA or RRSP by swapping a slice of fixed income exposure for a low-cost gold ETF and a Bitcoin spot ETF. Implementation is straightforward. Screen for the lowest MER gold and Bitcoin ETFs on your platform. Size the combined sleeve to 10 to 15% of the fixed income bucket, and rebalance annually or when the sleeve drifts more than 3 percentage points. The strategy has worked best during periods of rising debt to GDP and policy uncertainty. The main risk remains short-term drawdowns if risk assets rally sharply. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's pick is GMIN.TO. G Mining Ventures on the TSX in the precious metals sector. The strategy is an earnings surprise entry after strong Q2 results and reaffirmed guidance. The catalyst was a Q2 earnings beat with reaffirmed full-year guidance that triggered a 13% single-day move. Price cleared the prior session high on volume well above the 20-day average, with nearest support at the pre-earnings close. Gap fill risk remains if broader precious metals rotation stalls, so the stop sits at the session low for a maximum 4% loss on the position. The target is plus 3% to plus 6% on continued momentum into the next session. Confidence is medium because the earnings catalyst is confirmed and volume is supportive, yet sector rotation into precious metals remains unconfirmed by broader market breadth. This trade isolates an earnings surprise setup in a sector with limited recent exposure, letting listeners observe how volume confirmation interacts with a fresh catalyst before committing to a multi-day hold. It also demonstrates the fixed horizon exit rule in action on a same-day basis. Last week's hold was NFI.TO on a catalyst-driven entry tied to a domestic demand recovery narrative for transit equipment. The actual hold ran 6 calendar days from Tuesday open to Monday close. Entry came at $24.08. Exit at $22.29. The position lost 7.43% or $74.34 on a $1,000 stake. The domestic demand thesis failed to overcome broader rotation pressure once volume confirmation lagged. The rule now requires volume above the 20-day average before entering any catalyst-driven name already in a sector rotation. The show used to quote a cumulative alpha figure across roughly 45 trades. It is gone from the scoreboard, and that is deliberate. A number that quietly vanishes is the oldest tell in performance reporting. That figure blended trades whose entry and exit prices could not be tied back to the actual sessions the trade was held. An audit could not reproduce it, so it was not the show's to claim. The exit rule was the deeper problem. A position used to be closed on whichever session the next pre-market run happened to price it. So a Monday pick was held about 5 sessions and a Wednesday pick about 1. Per trade performance was measuring the day of the week as much as the quality of the idea. The hold is now a fixed, published number of sessions. Some older trades mash no market prices at all, and they include the best and the worst results on the books. They stay published as history, flagged, and they are never blended into what the show says on air. What replaced it? From August 18, 2026, every pick is scored under one written rulebook. Entry at the first session open on or after the pick. Exit at the stop or at the fixed horizon. One position, $1,000, no discretionary exits. The rules and the full trade-by-trade ledger, including the losers and the voided picks, are published for anyone to check at the Modern Investing Performance page at naranetwork.com. An invitation to check with no destination is not an invitation. The honest cost, stated plainly, the record is now small, so for the next several weeks, the alpha number will be based on a handful of trades and will not mean much on its own. That is what an honest track record looks like early. Do not spin it. This is exactly how a listener should audit any track record they are shown. Ask when the record started and whether that date was chosen after the fact. Ask what the exit rule is and whether it was fixed in advance. Ask whether losers and abandoned positions are included. Ask whether the individual trades are published or only the summary. A record that cannot answer those 4 questions is a story. Portfolio performance, simulated at $1,000 per trade, shows 53 total trades at a 53% win rate and cumulative profit and loss of $202.74. Matched window alpha versus NASDAQ stands at negative 7.59% across 2 rules-based trades, the headline number, with too few trades to call an edge. It is a scoreboard, not evidence. Average return per trade sits at plus 0.38%. Best trade plus 20.11%. Worst trade negative 11.80%. Current streak 3 losses. Imagine you own a Canadian bank ETF and see a headline that the 55 and older labor force participation rate has kept drifting lower since COVID. Your order fills at the previous close, but the real mechanism is that lower participation signals slower consumer spending and weaker loan demand, which can compress net interest margins faster than headline unemployment figures suggest. In the most recent data, the 55-plus cohort never recovered its pre-pandemic level and continues to trend down, a dynamic that typically shows up in bank and consumer discretionary names within 2 to 3 sessions. What most retail investors miss is that participation rates are released monthly with the jobs report and can be cross-checked against the same-day volume in rate-sensitive ETFs. Professionals always look at that volume spike first before assuming the headline is already priced in. The concrete misconception to avoid is treating the unemployment rate as the only labor market signal. Participation trends often lead sector rotation by days. TradingView's earnings calendar lets users filter by market cap, sector, and expected move, then overlay analyst revisions and options implied volatility in one view. Canadian investors can use the free tier to screen TSX names the night before results and set price alerts for post-earnings gaps. The platform's browser extension also surfaces unusual options flow tied to those same tickers. Interactive Brokers supplies real-time, exchange-native option chains with live Greeks and probability of touch metrics that most retail platforms omit. TFSA users can quickly model covered call yields on names they already hold without leaving the platform. The data is available on the desktop TWS or mobile app at no extra cost beyond standard commissions. Meta is preparing to release a consumer version of its internal OpenClaw AI agent, internally called Hatch, within weeks and targets an October update for its next large model. Add META to the TFSA watchlist for any post-launch volume spike above the 20-day average. NVIDIA's upcoming earnings are projected to lift TSMC through increased AI-related wafer demand. Hold existing TSMC exposure through the print, but avoid adding until volume confirms the reaction. Questerre Energy reported that emergency turnaround work at the PX Energy oil shale facility finished on schedule. Monitor QEC.to for any follow-through volume above average before considering a re-entry. The average price of a 3-year-old used vehicle rose from $23,624 to $32,651, according to an 11.4 million vehicle study. Trim any auto parts exposure on the TSX if tariff headlines intensify this week. Open your brokerage platform, pull up the 20-day average volume for GMIN.to and compare it to today's volume. If today's print is at least 50% higher, note the exact price level that would trigger your own earnings surprise entry rule. Before we wrap, watch how GMIN.to volume behaves at the open tomorrow and whether the earnings momentum carries into a second session. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Tesla Shorts Time, your daily deep dive into everything Tesla. Find every show free at naranetwork.com. Following the long arcs, story trackers on naranetwork.com. Follow major programs across episodes. Tesla, SpaceX, AI, space science, and more. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?